Welcome to Iraqi Dinar Today latest news. The community is currently buzzing with unprecedented and unexpected reports that have seemingly emerged out of nowhere, generating a level of excitement and curiosity not seen in quite some time. In a sudden rush of activity, currency holders across the globe are sharing intensely specific claims of mysterious early exchange appointments, quiet private invitations, and a surge of new rate speculation focused on the year 2025, involving both the Iraqi Dinar and the Vietnamese Dong. This sudden wave of reports, whether substantiated or not, marks a significant shift in the tone of the long-running revaluation discussion. The sheer volume and the surprising consistency of the details being shared are compelling enough to warrant a deep dive into the circulating chatter. Something truly unusual appears to be in motion, and today's comprehensive report aims to dissect every message, every rumor, and every unexplained financial shift that has viewers sending us countless alerts. Over the past 3 days, various social media groups, dedicated currency forums, and encrypted private chat channels have exploded with numerous, similar claims from individuals who hold the Iraqi Dinar and the Vietnamese Dong. According to these individuals, a limited number of unexpected invitation calls and discreet electronic messages are being quietly distributed. Some reports even detail face-to-face communications allegedly coming from financial insiders or former banking representatives. What differentiates this current flow of information from past rumor cycles is not just the sheer number of people coming forward, but the startling uniformity of the reported experiences. Many claim they were contacted without having recently signed up for any notification service. Others mention the caller already knew their name and, significantly, the specific foreign currency they possessed, suggesting a degree of organization behind the alleged contacts. The instructions reportedly given during these communications are another element adding to the intrigue. Individuals claim they were given unusually detailed and strict instructions for the purported early appointments. These often include directives to arrive alone, to bring specific forms of identification, and to be prepared for immediate and thorough verification of their currency holdings and personal details. The specificity of these reported instructions stands in stark contrast to the vagueness of previous rumors, fueling the belief among some that a genuine, albeit highly restricted, process might be underway. It is crucial to note that none of these individual claims have received any official acknowledgement from major banking institutions, nor has any government agency confirmed the existence of an organized exchange event. Yet the sudden, cohesive surge of these similar personal testimonies has raised a major question. Is a limited, private early access system being quietly tested in a pilot program setting? Whether these dramatic personal accounts prove to be accurate breakthroughs or simply the result of escalating speculation, the report's volume and serious tone have drawn considerable attention from even the most skeptical observers. The community is understandably asking why so many reports are converging with such similar, striking details at the exact same moment. This heightened curiosity is further amplified by one of the most surprising and frequently reported elements: the alleged use of private, off-site locations for these early exchange meetings, instead of traditional, publicly visible bank branches. The move away from conventional financial settings adds an entirely new layer of mystery to the unfolding narrative and the 2025 discussions. Multiple individuals insist they were directed not to bank lobbies, but to small, unassuming office buildings, high-security controlled suites, or temporary facilities seemingly set up for limited use. Descriptions of these alleged venues include quiet hallways, a notable absence of clear signage, and professional staff checking identification papers directly at the entrance. The consistent depiction is that the experience felt highly organized yet intentionally private, as if the setting were deliberately chosen to minimize public visibility and avoid attracting any unwanted attention or heavy traffic flow. These accounts consistently describe a setting far removed from the expected environment of a traditional financial transaction, adding to the sense of a controlled, secret event. Some of those sharing their experiences claim they were explicitly asked to surrender their personal electronic devices, like mobile phones, placing them in a secure locker before being permitted to enter the main meeting room. This detail, while unconfirmed, suggests an extreme focus on confidentiality and information security, which many interpret as a sign of a highly sensitive financial operation. It must be strongly reiterated that all these details are personal accounts from individuals sharing their stories and have not been independently verified by any official institution. Nevertheless, the striking pattern in these testimonies is simply too significant for the community to ignore. The central question remains, why would any early exchange appointment, if such a thing truly exists, be conducted in secretive, off-site locations away from the security and transparency of major bank buildings? The current circulating theories attempt to rationalize this reported behavior. Is it part of a security trial? Is it the initial phase of a pilot program designed to test procedures under controlled conditions? Or is it simply elaborate, creative storytelling being spread by overly excited currency holders? At this stage, without official confirmation, we cannot definitively say. However, the consistent nature of these off-site location claims has added a compelling and almost cinematic layer of intrigue to the broader Dinar and Dong conversations, now unfolding in 2025. It suggests, at least to those reporting the stories, that the process, if real, is being handled with an exceptional degree of discretion and security, distinguishing it from all previous rumors. Running parallel to the mysterious appointment, claims is a separate but equally intense wave of speculation concerning reported rate expectations for 2025. Even though no bank has publicly confirmed any new currency rate, and there has been no official revaluation announcement from any government body, social media channels are saturated with speculation about significantly updated value projections for both the dinar and the dong. The chatter suggests that some financial observers, tracking Iraq's ongoing economic adjustments, believe they are seeing indicators of strengthening national currency conditions. This interpretation focuses on foundational economic stability rather than pure speculation, aiming to connect national development to potential currency shifts. Furthermore, other commentators are pointing to Vietnam's consistent economic development, its expanding manufacturing sector, and its efforts to modernize and fully integrate its digital financial systems as powerful indicators that a financial shift may be brewing on the horizon. While these interpretations offer contextual food for thought, they should not be mistaken for factual predictions. It is essential to emphasize that legitimate international currency markets operate strictly on confirmed policy changes, official announcements, and verifiable economic data, not on unverified rumors or online speculation. However, the reason these rate discussions are gaining so much unprecedented momentum right now is their surprising alignment with the sudden reports of early exchange invitations. When two distinct streams of high-profile chatters, speculative rate buzz and claims of confirmed exchange invitations, rise sharply and simultaneously, the community's natural response is to immediately start connecting the perceived dots. The question of whether these alleged dots truly connect remains open and unverified, but the specific, unusual timing of both narratives emerging together has commanded attention. This synchronized development is now causing even long-time established observers, who usually dismiss fleeting rumors, to pay a far higher degree of attention than they normally would. The confluence of these two highly charged topics has created a unique and intense atmosphere in the currency community. Another noteworthy trend emerging from the flood of community messages, is the surprisingly high number of reports specifically involving the Vietnamese Dong. For many years, the Iraqi Dinar has overwhelmingly dominated the global revaluation discussions. However, the Dong has recently become a much more frequent subject in the newest claims about reported appointments or verification meetings. Some individuals specifically state that their alleged invitations or contact messages mention Dong transactions as the sole purpose. Others report they were instructed to bring both the dinar and the dong, but sensed a notably stronger emphasis on the Vietnamese currency during the conversation. This increased focus on the dong is also accompanied by a number of unverified whispers about new and higher rate models being discussed privately. Though, again, no official financial institution has substantiated any of these claims. Analysts who monitor Vietnam's financial growth acknowledge that the country has been rigorously strengthening its economic framework, significantly improving its digital banking capabilities, and consistently expanding its global trade connections. While these economic improvements do not automatically mandate a major currency adjustment, they do position the dong to play an increasingly prominent role in regional and global economies. The most surprising aspect, however, is the sudden and noticeable shift in attention from dinar only stories to mixed dinar-dong narratives. Whether this reported shift reflects genuine behind-the-scenes financial movement or merely an evolution in the long-term rumor cycles is a point of constant debate. Regardless, the increased and intense involvement of dong-related chatter is one of the most significant and noticeable patterns characterizing the entire 2025 conversation. Furthermore, many holders have described new and highly sophisticated communication methods allegedly used in these early appointment contacts. Unlike older, less credible stories that often involved vague or generic email notifications, this new wave includes remarkably detailed instructions and specific information allegedly shared by the callers. Some individuals claim the callers were able to reference their full names, their approximate city or regional location, and even the approximate dates when they acquired the foreign currency. Other reports detail callers asking for confirmation on specific details, such as whether their banknotes were organized by denomination or were still mixed together in bulk. While this level of specificity could theoretically point toward a legitimate, organized system operating with insider knowledge, it could equally reflect highly sophisticated scam attempts that exploit publicly available social media information or advanced phishing techniques. Viewers must be strongly reminded never to send personal identification, banking information, passwords, or any form of upfront money to anyone contacting them about currency exchanges, as verified institutions never operate in this manner. Legitimate banking events are always publicly announced, and verified institutions never request private login information or upfront payments from customers for any currency exchange. Despite these crucial warnings, the intensity and highly specific tone of these alleged calls have sparked an intense debate within the community. Some firmly believe the level of coordinated detail in the calls sounds far too organized to be random scams, while others caution that modern scammers have become incredibly more sophisticated and convincing. As of now, the truth behind these contacts remains deeply uncertain, but the dramatic rise in reports detailing specific and personalized communication is certainly fueling and intensifying discussion across every segment of the community. In addition to the alleged contact, another element adding to the atmosphere of curiosity is the surprising increase in bank-related anomalies reported by viewers nationwide. Numerous individuals have shared accounts of sudden and unexplained foreign currency purchase restrictions at their local bank branches. Some banks have allegedly ceased offering certain currencies without any formal explanation, while others have severely limited the exchange process to much smaller, capped amounts. Banks are, of course, entirely within their right to adjust internal policies at any time for purely internal operational reasons, and these changes frequently have no connection whatsoever to major financial events. However, the timing of these reported restrictions has understandably captured the attention of both Dinar and Dong holders, who are already on high alert. Adding to the complexity, a few individuals claim that their regular bank tellers or branch staff provided highly unusual or vague answers when asked about foreign currency. Reported responses include phrases such as, "We're waiting for updates," "A system change is happening right now," or "We're not authorized to process those specific requests at the moment." While none of these anecdotal claims officially confirm any currency revaluation or special early appointment program, they certainly contribute to the overall atmosphere of uncertainty and heightened curiosity. Often, internal policy updates, regulatory reviews, or routine software upgrades can temporarily create these kinds of situations, and sometimes employees simply misunderstand or miscommunicate technical information. Nevertheless, the convergence of multiple viewers reporting these similar experiences has significantly added momentum to the growing speculation that something is changing within the financial landscape. As more and more stories continue to pour in, another major, consistent theme is emerging: the element of secrecy. Many individuals who claim to have received early appointment notifications state they were explicitly instructed to avoid discussing the details of the call or meeting publicly. Some were reportedly told not to speak about the appointment time, the private location, or the identity of the person who contacted them. Others claim they were asked to keep the entire interaction offline and confidential until further official notice. While secrecy can often be a major warning sign associated with fraudulent scams, as fraudsters often seek to isolate their potential victims, supporters of the revaluation theory argue that high levels of confidentiality are perfectly normal and expected in legitimate, limited pilot tests or restricted financial rollout programs. Once again, we cannot confirm the legitimacy of these reported instructions. What is undeniable, however, is that this focus on secrecy is contributing significantly to the current tension and immense excitement circulating throughout the entire community. When information is intentionally restricted or deliberately withheld, speculation naturally tends to grow exponentially, often filling the information void. Some members of the community interpret this secrecy as powerful evidence of a sensitive and imminent financial rollout. Others interpret it as a clear indication that the entire phenomenon is likely unreliable or a coordinated hoax. Regardless of which interpretation ultimately proves correct, the intense discussion surrounding the reported need for secrecy is currently shaping a large part of the 2025 Dinar and Dong conversation, capturing the collective imagination of the community. A central question that viewers keep submitting is whether these numerous similar reports could be part of a controlled test environment. In the complex worlds of high finance and sophisticated technology, limited pilot programs are routinely and quietly tested before any major initiative is launched on a wider public scale. These trials typically involve select small groups, operate within controlled, private environments, and limit access to only a few known points. Some community members strongly believe that this concept of a pilot program could perfectly explain why only a certain, limited number of individuals claim to have been unexpectedly contacted for early appointments. They theorize that an initial test system might require a diverse mix of currency holders to properly test verification protocols, new scanning equipment, and advanced document review methods under real-world conditions. Conversely, other critics argue that a genuine pilot program for a major currency shift would never involve regular, private citizens and would instead rely exclusively on professional bank staff, internal auditors, or trusted financial testers. Without any official confirmation, both possibilities remain firmly in the realm of speculation. However, the idea of an early access test program has gained enough traction and attention that it is now recognized as one of the leading, most discussed theories circulating online today. Whether this theory holds any factual weight or simply reflects the community's intense desire for a tangible sign of progress is still an open question, but it undeniably adds another complex layer of intrigue to the dramatic conversation unfolding today. At the heart of this entire, complex discussion is the Iraqi dinar itself, a national currency that has been the focus of fervent speculation for well over a decade. Those who support the revaluation theory point to Iraq's increasing and diversified economic activity, its expanding oil partnerships, and its consistent, long-term modernization efforts as clear signals of an inevitable, long-term financial strengthening process. Critics, however, argue that Iraq's national currency policy is meticulously managed and is highly unlikely to shift dramatically without clear, formal, and public government decisions. Both sides, however, readily agree that Iraq's financial trajectory has been visibly evolving year after year. Ongoing efforts towards economic reform, the introduction of updated banking technology, and continuous work to stabilize markets have created a tangible foundation that naturally fuels speculation, even in the absence of a revaluation announcement. Therefore, when the foundational context of Iraq's progress is combined with the sudden, intense wave of reported early appointments, the currency community is left feeling more energized and simultaneously more divided than it has been in several years. Some passionately believe the timing of all these events is simply too convenient and coordinated to be ignored. Others strongly caution that real, consequential currency adjustments are always, without exception, publicly declared and transparently executed. What cannot be denied is that the core dinar conversation has surged dramatically back into the central spotlight in a manner not witnessed for a number of years. The conversation has now become a powerful confluence of long-term economic hope and immediate, unconfirmed personal claims. The Vietnamese Dong is also currently receiving a highly unusual level of attention, and some financial analysts note that Vietnam's robust economic environment has been steadily shifting and improving. Significant, consistent growth in manufacturing, substantial foreign direct investment, and a continuous expansion of global trade activities have cemented Vietnam's increasingly prominent role in the entire Southeast Asian region. This impressive economic progress has naturally given rise to discussions about the long-term prospects for the currency's strength. Those who support the Dong believe that major improvements in national technology, widespread banking modernization, and extensive international integration efforts signal a potentially much stronger future value. Critics maintain a cautious stance, emphasizing that Vietnam has historically maintained a tightly controlled exchange rate system and is highly unlikely to implement sudden, dramatic, and major changes without extensive planning. Yet, the undeniable fact is that the growing interest in the Dong within the revaluation community cannot be ignored. Many holders are becoming noticeably more vocal, especially since the appearance of new, unverified reports claiming early appointments that specifically reference Dong verification. These claims have intensified discussions, leading to speculation that the Dong could potentially play a more significant and prominent role in any possible future financial shifts than previously thought. Whether these various theories prove to be accurate or are simply fueled by escalating speculation, the increased and sustained attention on the Dong is heavily contributing to the vibrant 2025 rate buzz now dominating the narrative. One significant area of continuous debate among community members is the theory that extensive technology upgrades currently underway at various banks could be contributing to some of the highly unusual customer experiences that have been reported. Over the past few years, countless banks globally have transitioned to advanced digital operating systems, updated their authentication processes, and introduced sophisticated new scanning and tracking equipment. These complex changes can, at times, inadvertently create temporary service delays, trigger policy updates, or lead to employee confusion, which might logically explain why some bank clerks are reportedly providing vague or unusual answers to customer inquiries. Simultaneously, modern global financial systems are increasingly reliant on automation and digital verification tools. This pervasive reliance means that some behind-the-scenes technological changes could inevitably affect how foreign currencies are correctly logged, tracked, or processed within the system. Supporters of the revaluation narrative argue that these comprehensive, expensive technology upgrades could be a deliberate step in preparing banks for larger, future currency adjustments. Critics strongly counter that banks are always constantly updating their systems, and the current timing could be purely coincidental and unrelated to any major event. Regardless of which viewpoint is correct, the confirmed presence of major banking technology changes has certainly influenced how people interpret the current wave of rumors. When such technological shifts align with rising and intense speculation, it becomes incredibly easy for narratives to blend together, creating a powerful story that takes on a life of its own within the community. Another crucial angle worth exploring is the significant psychological impact these circulating reports are having on the Dinar and Dong communities. Many currency holders have been patiently waiting for years, even decades, clinging to the hope of a major financial change. When fresh claims surface, especially those describing private appointments or early verification contacts, individuals naturally experience an intense emotional cocktail of excitement, renewed hope, and heightened anxiety. At the same time, this powerful emotional reaction can often make it substantially harder for individuals to rationally separate verified fact from pure, intense speculation. This delicate emotional landscape is a core part of what keeps the entire conversation vividly alive year after year. Those who support the enduring hope argue that maintaining optimism is vital because major financial shifts often manifest gradually over time, only to materialize seemingly suddenly at the moment of completion. Critics, however, caution that excessive and blind optimism can unfortunately lead people to accept unverified information far too easily and without proper scrutiny. Both sides present valid points, and both perspectives actively shape the community's collective mindset today. The most important action for all viewers is to remain absolutely grounded, consistently cautious, and thoroughly informed. As we move through this detailed report, viewers must remember that while these specific stories are compelling and dramatic, they remain unverified until formal, official announcements are made by recognized institutions. As new individual accounts continue to emerge, some community members have naturally begun comparing the current 2025 rumors to previous waves of speculation from past years. In earlier cycles, the focal point of the rumors often centered on vague bank memos, unverified overseas updates, or sudden, inexplicable market shifts. This time, the central focus is much more personal and immediate. Reports of direct contact, confirmed phone calls, highly specific appointment instructions, and claimed personal interactions with alleged financial representatives. This shift is making the current wave feel more personal and far more urgent to a number of holders, amplifying the emotional weight of the claims. However, it is crucial to remember that all rumors often evolve over time, naturally becoming more detailed, complex, and seemingly sophisticated as people share and elaborate on their experiences. Comparisons to earlier years also reveal how narratives shift and change depending on current global economic conditions, major geopolitical events, or widespread market behaviors. Some individuals argue that the 2025 environment is fundamentally different because global finance is now more digitally integrated, more interconnected, and far more responsive to real-time economic data than ever before. Others believe the underlying patterns remain exactly the same as always, a predictable cycle of community curiosity that spikes dramatically when either hope or anxiety is rising. Either way, understanding how today's dramatic claims compare to earlier historical ones helps viewers process the current situation with clearer judgment and greater perspective. One of the most frequently posed questions is whether large, established financial institutions are currently preparing for any kind of unusual or major currency activity this year, based solely on public statements and official communication channels. Banks globally continue to report that they are operating as normal, with absolutely no formal announcements regarding any special or early exchange programs. However, it is a normal part of their operation that banks do periodically and quietly change their internal procedures, update their transaction policies, or limit certain transactions based on evolving global or regional conditions. These routine internal adjustments can be easily misinterpreted by an on-edge public as significant signals of impending major events. For example, if a major bank temporarily stops offering a particular foreign currency due to low supply, internal auditing requirements, or sudden regional restrictions, customers who are already tuned into the rumor mill may immediately connect these changes to broader, circulating stories they have already heard. This act can drastically amplify speculation and nervousness. Supporters of the revaluation narrative argue that banks would naturally and strategically avoid making any public announcements until the precise moment of official policy change. Critics firmly respond that any major national or global financial change of this magnitude would absolutely necessitate full transparency and public, official documentation. Until institutions formally release official statements, all viewers must treat all information, even the most exciting or convincing personal reports, with the utmost caution, skepticism, and balance. Another conversational topic gaining significant traction is the question of whether broader geopolitical developments could be subtly influencing the rise in this specific speculation. Iraq, like many developing nations, continues to navigate complex economic reforms, internal political discussions, and evolving international partnerships. Similarly, Vietnam remains highly active in regional trade, maintains strong manufacturing growth, and continues its aggressive technology expansion. These continuous global shifts often create fertile ground for currency speculation, especially when the discussions involve the long-term, untapped economic potential of a nation. Supporters of the revaluation idea argue that sustained economic improvements in these countries must inevitably influence their currency value. Critics consistently respond that any major currency adjustment requires clear, actionable, and public policy decisions, not just general or gradual economic progress. Nevertheless, it is undeniable that global developments do contribute significantly to how people interpret the rumors. When foreign investment demonstrably increases or trade activity rises, some currency holders automatically view this as a powerful signal of potential financial change. Whether these large, global factors have any direct or proven connection to the current, smaller reports of early appointments remains unproven. But they certainly influence the community's overall mindset and add necessary context to the growing wave of dramatic discussions. The global financial landscape is a constant backdrop to the localized claims being shared today. One particularly interesting type of report that we have received repeatedly involves claims of sudden, brief bank account alerts or unexpected changes within mobile banking applications. Some individuals claim their online accounts briefly displayed system updates or temporary access limitations at unusual, off-peak hours. These experiences are almost certainly and invariably normal technical maintenance cycles, which banks perform routinely, often overnight, to ensure system stability. However, because so many viewers are actively and anxiously watching for any possible sign of a major financial event, even routine, normal maintenance can immediately trigger and escalate speculation within the highly attentive community. It is a natural human tendency for people to interpret ordinary, everyday occurrences through the lens of extraordinary, persistent rumors, especially when those rumors are currently gaining significant traction and detail. Still, we want to strongly emphasize that brief account updates, generic maintenance messages, or temporary access delays are absolutely not indications of any confirmed financial shift. Modern banking technology involves constant and necessary updates, especially during late night or early morning hours. But the reason we mention these particular reports is that they contribute to the overarching sense of mystery currently surrounding this week's wave of dramatic chatter. In moments where multiple unusual, seemingly unconnected events, calls, restrictions, and messages appear to stack together, it is incredibly easy for speculation to escalate quickly, even without any genuine, verified evidence. Viewers have also been sharing anecdotal stories about an alleged increase in activity from wealth advisors and private bankers. Some claim they were contacted for what appeared to be routine financial reviews, but the timing felt extremely unusual given the surrounding speculation. Others state that these advisors began asking specific questions about their foreign currency holdings, something they insist had never happened to them before. It is important to note that wealth advisors regularly check in with their clients, particularly at the beginning of new financial years or during periods of general market volatility. This is completely normal professional practice. But when this normal timing overlaps with intense, rising community speculation, some holders view these interactions as potentially part of a much bigger, coordinated picture. Again, there is no formal confirmation that wealth advisors are participating in any type of early appointment program, but these reported interactions have naturally sparked discussions about whether professionals in the financial sector are independently anticipating changes or are simply acting on their standard, scheduled procedures. As always, it is absolutely essential for viewers to avoid jumping to premature conclusions. Normal, scheduled activities can appear highly significant when placed alongside circulating, dramatic rumors, but these reports remain a valid part of the larger story because they add to the overall sense of pervasive movement within the financial landscape. Whether that movement is real or simply imagined by the community, another major question viewers are constantly asking is whether the non-disclosure instructions mentioned in some of the reports are legitimate components of a sensitive operation or simply another part of the pervasive rumor culture. Several individuals claiming early appointments state they were explicitly told not to discuss the details publicly, not to post anything online, and not to share any screenshots or messages. On one hand, enforcing secrecy can be a significant red flag characteristic of fraudulent schemes designed to maintain control. On the other hand, some highly sensitive financial pilot programs, if they are real, would logically and naturally involve strict confidentiality agreements. The critical challenge for all viewers is determining whether these dramatic claims reflect actual events or are merely designed to add compelling, dramatic flair to already circulating stories, enhancing their perceived credibility. It is also possible that some individuals are simply repeating what they have heard from others rather than accurately describing their own direct, personal experiences. Regardless, the persistent mention of confidentiality agreements is one of the strongest emotional triggers currently active in the community. Hearing the phrase, "don't tell anyone," can immediately cause people to believe that something serious, sensitive, and imminent is genuinely unfolding. While secrecy can powerfully generate immense excitement and attention, it can also dangerously expose individuals to risk if they place their trust in unverified or fraudulent sources. That is why anyone receiving unexpected or unusual communication should remain intensely cautious, deeply skeptical, and highly protective of their personal information until the legitimacy of the source is absolutely clear and officially verifiable. One of the newest and most unsettling patterns emerging in the last few days is the claim that some individuals allegedly received approximate rate figures during their early contact conversations. These reports suggest that callers mentioned potential value ranges or estimated exchange values for either the dinar or the dong. We must reiterate yet again that none of this is verified. Legitimate financial institutions do not and cannot give rate predictions or speculative figures over the phone to private citizens. If anyone provides unofficial, specific rate numbers, it is almost certainly baseless speculation, or far worse, a deliberate attempt to manipulate trust or set up a scam. Nevertheless, these specific reports are spreading quickly because they align perfectly with the widespread rate buzz already intensely circulating. In moments where many people are eagerly seeking any form of clue or confirmation, even unconfirmed arbitrary numbers can rapidly gain momentum and be treated as fact. It is imperative for viewers to fully understand that official currency rates are determined by formal national monetary policy decisions and international market forces, not by secret private phone conversations. Still, the sudden appearance of specific rate numbers within the current wave of stories adds yet another dramatic and highly charged layer that keeps the community's conversation perpetually alive. Whether these reported numbers originated from simple misunderstanding, accidental misinterpretation, or deliberate creative retelling, they have now become an indelible and powerful part of the narrative surrounding the current, unexpected claims of early appointments. Another highly discussed topic is the intriguing theory that certain regional clusters in the United States are receiving more attention than others. Many reports specifically mention major U.S. metropolitan areas including Dallas, Phoenix, Atlanta, Tampa, Nashville, Denver, Las Vegas, and Salt Lake City. These specific locations have been repeatedly referenced as areas where unusual financial activity or contacts have allegedly occurred. It remains unclear whether this reported pattern accurately reflects reality, or simply reflects the geographical locations of the most vocal and active community members. Population density alone can logically explain why more reports would originate from large cities, as larger cities inherently have more banks, more financial workers, more currency holders, and more active communication channels. However, some viewers sincerely believe that regional clustering is a genuine indicator of organized appointment waves or a methodical rollout plan. Others argue that it is nothing more than a coincidental observation bias. Without any official confirmation, both interpretations remain purely speculative. But the reason this discussion matters is that viewers residing in these specific cities are understandably on a particularly high alert right now, actively watching their local bank behavior, meticulously monitoring their email inboxes, and carefully listening for any unusual phone calls. Regardless of whether or not these regional claims hold any ultimate truth, they are profoundly influencing the emotional atmosphere and intensifying the collective anticipation across the entire community. As we move toward the conclusion of this extensive report, it is vital to address the enormous volume of messages we have received from viewers asking for clear guidance on what they should actually do if they receive one of these unexpected appointment calls or emails. The safest and most prudent response is simple and unwavering. Treat every single contact with extreme caution. Absolutely avoid giving out any personal or private information unless you have independently and conclusively verified the authenticity of the source through official, known channels. Do not share account numbers, banking passwords, or any form of private identification data. Be deeply wary of anyone asking for any form of upfront payments or requesting access to digital wallets or cryptocurrency accounts. Legitimate, established institutions do not and will not operate this way under any circumstances. At the same time, if someone genuinely believes they have received a real, legitimate communication, they should take the time to review the details carefully, compare them to established and known banking procedures, and consult with a trusted, professional financial advisor. The core goal is to remain properly prepared and informed without ever becoming financially vulnerable or emotionally compromised. Regardless of whether this latest wave of reports turns out to be a groundbreaking development or just another predictable cycle of intense speculation, staying grounded in verified fact is absolutely essential. Preparation is always a wise course of action. Blind trust in unverified sources is not. As we wrap up today's extended and detailed report, one thing remains perfectly clear. The Dinar and Dong communities are currently experiencing one of the most active and emotionally charged rumor cycles witnessed in recent memory. Claims of unexpected early appointments, reports of private, off-site meetings, the alleged existence of selective contact lists, and whispered 2025 rate chatter are spreading at an accelerating pace. Some viewers interpret this as compelling evidence that something highly significant is genuinely unfolding behind the financial scenes. Others believe it simply reflects the natural, inevitable rise and fall of speculation that characterizes all long-standing currency discussions. The objective truth behind all these claims remains, for now, wholly unconfirmed. What we can definitively state is that the current level of activity, the surprising consistency of certain reported details, and the sheer intensity of community interest combine to make this one of the most captivating and highly discussed chapters in the long revaluation conversation so far. Whether the recent dramatic reports are genuine early signals of a coming financial movement or simply a fascinating coincidence of timing and collective hope, you, the viewer, deserve clear, careful, and grounded information to navigate this complex period. Stay alert, stay cautious, and stay connected to verified sources. We here at Iraqi Dinar, our today latest news, will continue our tireless monitoring of every development, every claim, and every verified update as more details inevitably emerge. Thank you for watching, and be sure to subscribe so you never miss the next major update. Because the story unfolding right now could very well be one of the most pivotal of 2025.